Alright, let's dive straight in. The SEC has once again hit the pause button on a major Bitwise decision. Memecoins are exploding in July, and Gen Z is spending crypto daily while Gen X splashes out on big-ticket items. You're in the right place if you want the latest market-moving crypto trends. Yay! You know what to do. Hit subscribe, smash that like, and ring the bell to stay ahead. It starts in Washington. The U.S. Securities and Exchange Commission has announced it's postponing its decision on whether Bitwise's Bitcoin and Ethereum spot ETFs will allow in-kind redemptions. In practical terms, that means investors wouldn't automatically receive cash when redeeming shares but actual Bitcoin or Ethereum instead. Originally due by late July, the SEC extended the deadline to September 8, 2025, giving themselves roughly 45 to 90 days more to review. For Bitwise and other asset managers, this matters. In-kind redemptions align crypto ETFs with traditional commodity funds, reducing slippage, enhancing market efficiency, and offering tax planning advantages over cash-only settlements. Context first. Traditional ETFs, gold, oil, etc., use in-kind mechanics routinely, enabling authorized participants to swap actual assets for fund shares, keeping operations smooth and tax-friendly. Crypto fund structures have been held back by cash-only redemptions, leading to friction and taxable events. If approved, Bitwise's model could be a game-changer, not just for its own BTC and ETH ETFs, but for the future of fund structures across firms like BlackRock, Fidelity, and others. The impact: investors could expect tighter spreads, reduced arbitrage costs, and greater institutional confidence. More broadly, approval would signal the SEC is warming up to more sophisticated crypto financial products, not toward maturation, but the delay suggests they're still cautious, perhaps tracking custody, volatility, systemic risk, or even imposing compliance standards. Meanwhile, the clock is ticking for other issuers. September 8th brings acceptance. We could soon see a wave of in-kind-enabled crypto ETFs, accelerating liquidity and inflow. Now, twist to your screen. The Memecoin universe just exploded. In July alone, the total Memecoin market cap surged an astonishing 29%, jumping from about $55 billion at June's end to roughly $72 billion by mid-July. That's an almost $17 billion boost in under 3 weeks, and daily trading volumes peaking at over $18 billion, proof that retail momentum is everything. Leading the pack is Bonk on Solana, rallying a jaw-dropping 72% in July alone. It's not a flash in the pan. Bonk is deeply integrated with the Let's Bonk launchpad, enabling rapid token launches and robust ecosystem activity. Other notable movers include Floki plus 45%, Pudgy Penguins plus 58%, and core veterans like Dogecoin, Shiba Inu, Pepe posting steady 3 to 7% gains. Firstly, why now? Ethereum's recent rally up, roughly 22%, has revived risk appetite, funneling capital into meme tokens. Plus, Solana's launchpad, boom, means new meme assets are minted and bootstrapped daily. As Reddit users note, top memecoins like Dogecoin, Shiba Inu, and Pepe saw growth, while Floki, Pudgy Penguins, and Bonk led gains, with Bonk up 72%. That anecdotal tone echoes across Twitter and Telegram. Memecoin mania is real. The psychology is straightforward: fast-moving, meme-driven hype, network effects. FOMO, the inflows and volumetrics signal peak engagement. But remember, this is still speculative. While explosive, Memecoins carry high volatility and risk. Some may wind down once sentiment cools. Savvy retail traders will likely lock in dozens of % profits before the next cycle, swinging over to demographics. Crypto is moving off exchanges and into everyday wallets. A new BitGet wallet survey of over 4,500 users reveals 36% of Gen Z spend crypto daily in gaming, travel bookings, and small purchases. For context, that means more than 1 in 3 Gen Zers are using digital assets as pocket money. Meanwhile, Gen X isn't benchwarming. They're leading big-ticket purchases, with 40% using crypto for travel, digital products. Real estate. Breakdown. Gen Z's habits include 39% spending on gaming, 36% on daily spending and travel. Gen X preferences: bigger stakes, property, high-end experiences, durable goods. Millennials fall in between you, opting crypto for subscriptions, travel, digital products. What's powering adoption? Merchants are increasingly enabling crypto checks from QR codes at cafes to point-of-sale integrations at large retailers. That frictionless experience converts holders into spenders. And as adoption grows, so does legitimacy. Putting it all together, we've got an institutional evolution in ETFs, a speculative memecoin frenzy, and real-world consumer use cases growing across generations. That's 3 pillars: speculation and use case fueling crypto's next phase. So what does this mean going forward? If in-kind redemptions get SEC approval in September, expect lower ETF costs and more institutional flow. Memecoins may continue to explode during euphoric phases. It's attracting retail FOMO, but they remain highly risk-adjusted and friendly. And crypto as spendable cash will only grow as solutions improve. Now, I want to hear from you. Are you bullish on in-kind ETF evolution, playing memecoin hot streaks, or staying clear? And how are you using crypto? Are you spending it daily or stacking it for long-term goals? Let me know your take in the comments below. If this breakdown gave you clarity, smash that like button, subscribe, tap the bell and join the conversation below. We'll be back with more hot market insight, real depth, real speed. Catch you in the next one.